We begin tonight with a story that impacts every single American. For the first time since 2020, the Federal Reserve is cutting interest rates. And tonight we're here to break down just what that means for you. We're going to start with the basics. The Fed cut its prime rate by 0.5 percentage point. That number may seem small, but it has a wide-ranging impact, especially for folks working to make ends meet. KG, you take it from here, because in just a minute I'm going to talk with an expert about what it means.
Yeah, so this is what this all means. We're talking about things like mortgage rates and auto loans. Those are all going to get cheaper. Experts say today's decision could also have an impact on the election, and it's a sign inflation is finally cooling off, a big ripple effect from the pandemic that the Federal Reserve Chair has kept a very close eye on.
This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
And you probably noticed those comments are really complex, and there's a good reason for that. When Powell speaks, he single-handedly has the ability to move the market, so he has to be really, really careful with what he says. So to help break this down and how this impacts you and your family, let's get over to Devin.
All right, KG, joining me now, Dewey Steffen with Great Lakes Wealth. Dewey, let's start with the basics. And for people who are borrowers, and that means whether you've got credit cards, home loans, especially an adjustable home loan, but looking to buy a car, this is going to be almost immediately pretty good news, right?
Well, for those that are looking to get new loans, absolutely.
Yes.
If you're in an existing loan, it's not going to have any effect. Those adjustables will adjust at some point in time. But for now, again, you want to pay attention to not only what happened today, but what's coming down the road.
The other thing that this really can't do anything about is the prices that we've already seen that have jumped on a lot of things, right? This has no effect on the prices in the grocery store, for example.
Well, that's called inflation. And one of the impacts of today and the movement for today was because of inflation. Believe it or not, I know it's hard to believe, but inflation is back down to under 3% from as high as 9%. And we may be not seeing that individually, but that's what the government data tells us.
Because while inflation comes down, the prices don't. They seem they're already there. But it was interesting to watch the reaction of the market today, down at last check. It would seem that while I think there was it seemed like there was a lot of debate over whether it would be 0.25% or 0.5%. It ended up being the bigger cut. I think folks on the market, that's clearly apparently what they were expecting. It was already baked in.
Well, it's a jockeying for position. And not only is the announcement at 2 o'clock, but then the chairman spoke and he talked about there'll be some additional cuts coming. And then it's about how significant this may be, and so the markets were moving, just trying to figure it out.
You expect another cut coming later this year?
Absolutely. He said the base case is another 50 basis points or 0.5% before year end, and then another few cuts next year, so we're just getting started.
Dewey Steffen, thanks so much for your expertise. Appreciate it.
My pleasure.
Yeah, KG?